Hello friends, today let us discuss something on stock exchange. Before moving to the stock exchange, let me tell you what this stock exchange is. Exchange basically means it's exchange of anything between two or more persons. So when you come across the stock exchange, it refers to the stock market. Market normally is a place where buyers and sellers meet and interact and carry out their transactions. In the case of stock exchange, normally this basically is a place where we come across normally the buyers and sellers of the various securities. They may be a broker, they may be speculators, they may be arbitrageurs, or there may be the investors who want to invest in the respective securities. So basically it is normally located in Mumbai, and normally we find that normally stock exchange plays a very important role because it is a barometer of our economy. It is a place where crores of trade happens, volume of trade normally happens a lot in the case of stock markets. So basically the purpose of the stock market is now again to make the persons meet in a particular place, interact, carry out the respective stock trades. Today we find that normally the stock market has got a lot of transactions, so there may be chances of normally the illegal money that can also be coming inside, or there may be chances of doing a financial frauds or a scam. There may also be a chances of normally the investors not getting their interest, or normally their interests not been protected by others. So in such case, it has become very much essential to regulate, to assist, and also to control the activities of buying and selling the securities. In other words, it has become very much essential to regulate the stock exchanges. So this is basically about the stock exchange, a place where normally buyers and sellers meet and interact with their financial transactions. They can buy the shares and securities. They can also sell the shares and securities. They can trade in the shares and securities. This is basically about the stock exchange. Now let us see what are the different characteristics that the stock exchange should have, must and should. First thing is a stock market or normal stock exchange is an organized market. Organized market means normally there is a particular way in which normally the trade is transacted. Buying and selling of the securities are being transacted in a particular market. The individual investors or normally corporate investors can freely come observe the market, see which stock to purchase, which stock to sell, and normally they can do the transactions in the market. It is perfectly organized because whole information is completely transparent. Prices of the security is transparent. The volume of trade taking place is transparent. Experts' opinion regarding the companies is also transparent. Whatever they want, such type of information is available freely in the stock exchange. That's why it is called as organized market. Second one is, it is a securities market. Securities market means now again, what they do is they buy and sell the securities or the shares of different companies. Basically, the various companies' shares are freely sold or purchased in the case of normally the stock market. That's why it is a securities market. Thirdly, it is a secondary market. Secondary market means they sell the existing securities, and the condition is these securities must be listed in the stock exchanges. Listed securities means normally those securities that are recognized by the SEBI, recognized by the government, recognized even by normally the stock exchange. Such kind of approved securities can be sold in this particular market. Any point of normally the existing companies can trade. That's why it is called as secondary market. It is not a primary market. Secondly, fourth one is it is a part of the capital market. Parts of the capital market means normally we find that the respective capital market is a place where normally again we find that whole investors invest their money freely into their financial transaction, purchase the shares, and normally again they also sell the respective shares. So it's a part of the capital market. Okay, nextly, it trades with the listed securities. There is a conditions for listing which is in the SEBI, which we will deal in the later classes. So now let me tell you, it deals with the listed securities. Listed securities are genuine securities where there is no suspect, no question of fraud, no question of normally invalid companies, no question of unregistered companies. So in such case, such a genuine companies are traded here in the respective markets. So that's why it is normally known as listed securities. Next, restricted membership. Membership of this company is membership is restricted. Anyone cannot become a member of a stock exchange. There are conditions for that. Okay. Normal condition is normally, so first thing is normally he must be genuine. He must not have any financial scam. He must be the citizen of India. He must also have normal shares with the respective stock exchanges. That is the next. Dealing only by the members. Dealing in stock exchange can be done only by the members of the stock exchange. Members have the privilege, members have normally the autonomy to trade in the respective stock markets. Next, standard practice. The stock market has got a certain standard practices. Market opens normally at 9:15, closes at 3:30, which means that it is standard timing in which normally the respective trade can be carried out, one thing. And second thing is normally for everything normally there is a transparent description, or normally the transparent coverage, transparent showing of the prices. So we find that there is no chance for anyone to normally just to depict the prices by just observation or just by normally the guesses and other things. So there is a clarity in the case of prices, clarity in the trading, clarity in the brokerage, clarity in normally the respective trade volume taking place. They also issue the contract note as per normally the SEBI regulations. They have got a standard practices as such. Next, stock exchange is also facilitator. The role of the stock exchange is it's a facilitator between the buyer and the seller. See, buyer should not lose the amount and seller should not get injustice. So in such case, normally to have a fair trade practice, to have ethics in the trade, normally so it acts as a facilitator or a connecting link between the respective persons, that is buyers and sellers. There is a scope for speculation. There is a lot of scope for speculation here. The prices speculate. The speculation means normally there may be a changes in the prices. Level of prices will either increase or decrease every moment. Anytime we cannot expect the stability in the prices. What happens is prices change in the markets there, depending on the trade volume, depending on the industry trends, depending on government policy, depending on whatever is happening in the respective markets. There will be a either positive impact or a negative impact on the price movement of the stocks. So these are normally the characteristics are when you look at normally the respective stock exchange. Next, let us see what is the role and functions of a stock exchange. The stock exchange normally has got a major role to play as far as our Indian markets are concerned. Developing economy markets have lot of things to know when you come across the stock exchange. The firstly, normally let us see, it's a ready market for a security. So in the trade timings, we can purchase any stock of our own choice. We can also sell whatever the portfolio, whatever we hold, that is there. And any point and all, we can see the prices, observe, and then decide whether to keep our securities, sell our securities, or hold the securities till our expected price is reached. It's a ready market. Secondly, there is a liquidity of the securities. So since large volume of transaction take place, we know that there is a huge volume of trade. When huge volume of trade is there, we also know that normally crores of transaction takes place on daily basis in a single market. So that's why we say that there is a liquidity of the securities for this type of markets. Next, there is a systematic evaluation. Price is evaluated based on certain parameters. When we say that normally returns of the security, we normally treat it as alpha. When we say the risk of the security, we say that it is beta. Normally, the alpha and beta is calculated by normally again correlation between the respective stocks. So we say that normally when beta is greater than 1, it is highly riskier stock. When beta is equal to 1, it is risk neutral. When beta is less than 1, it is less risky stock. Likewise, there is an evaluation of risk and returns taking place in the market. Next, capital formation. There is something called as capital formation, which is possible here because most of the companies raise the capital by the investors investing in the shares of the companies of the stocks. That is there. So because of investors' investment, there is a huge capital raising happening in the case of stock market. It also helps in the promotion of savings habit. The people save by investing in the stocks because the dead money is normally becomes invested money. Invested money later on becomes profit to them in the form of returns, whatever is been given by the company's appreciation of stock prices. This is there. Next, investor protection. Since there is a SEBI, today we speak more about investors protection. Investors' right is protected. Investors' their duties, whatever is there, that has to be followed. Investors will get every information, whatever is needed to them. Investor will also be able to decide what time he has to exit out of the company and how much he has to invest further. Suppose we want to book more profits from the respective companies. Corporate governance. Corporate governance means normally basically dealing with the ethical principles. Okay. When any company is trading in the stock market, they should be aware about the rules and regulations laid on by the SEBI. They must be transparent, they must be independent, they must also be very much responsible in their transactions. That's what is corporate governance. So sum of what we have to study today is what is a stock exchange, then what are the characteristics of stock exchange, and what are the roles and functions of a stock exchange. Thank you very much.